Hello.
Hey, Nick.
Hey, Bill. Nice background.
You like that?
Yeah,
Or not?
where did you create that?
Oh, I just had our marketing department put something together.
Nice. Maybe I should have my marketing department put something together for me. Oh my gosh. That's awesome, man. Cool. All right, we are getting people jumping in here. Um, yeah, I would suggest we wait till maybe like 10 or sorry, 11, maybe 03 or 05. What do
Okay.
you think?
Yeah, no, that sounds good to me.
Um, so while we're waiting, maybe you and Morgan can just give a little overview or just introduce yourself and overview of Now CFO. Obviously, you're going to run through some content, but as we're sitting here, that might help.
Yeah. No, I'll certainly start that off. So I'm a partner with Now CFO. I'm in charge of our Seattle office. So Morgan Rogers, who I think is connecting to audio right now, she's our business development leader out of Seattle. And Now CFO is a outsourced operational accounting firm. What we've always told people is, we solve the accounting and finance problems that all companies face. Now, that's still the case today. It's certainly the problems that companies are facing seem to be changing pretty regularly these days. But we're still here to be a resource to help them out in whatever way possible. And right now, I think what's kind of been at the forefront of what a lot of people are looking at is these SBA loans and paycheck protection programs. So that's what we're really trying to help people out with, not just how to apply for it and what you can get out of it, but what you'll need to do after that as well. So we'll certainly get into that more. But I don't know, Morgan, do you want to kind of tell a little bit more about the history of Now CFO and kind of go from there?
Yeah, I'd love to. So yeah, as Bill was saying, Now CFO, we started 15 years ago down in Salt Lake City, and we've expanded ever since. Now CFO is an accounting firm, and we specialize in CFO, controller, and accounting support solutions. And we typically work with people on a part-time project or interim basis. So a lot of like small to medium-sized companies that need accounting help, we come in. We typically would work on site. Given the situation, we would of course do it remotely. And solve whatever that is. We really like to make a customized solution for your accounting and finance because your company is unique and has its own set of issues that you're trying to solve. So we don't have long-term commitments or minimum amount of hours required. And one of the ways that we really differentiate ourselves in the market is that everyone at Now CFO is employed through Now CFO. And we think that's a real benefit for people for a couple of different reasons. One, we want to attract and retain top talent out there and make sure that you're getting accounting professionals that are in this for the long haul, not just because they're in between jobs or because they got bored of being retired. The other reason is whenever you're going out to an engagement, we're trying to create efficiencies. And so if this job, grow, we're out there cleaning things up, making sure things are being ran properly, and that job that was 20 hours a month gets shrunken down to 10 hours a month, we don't want you to feel like, you're not going to get that same service. And so providing them a salary, we're going to be able to cut that out completely. So. And that's kind of it in like a very condensed version. And I'm happy after this call, if you have any other questions about Now CFO, I'm more than happy to kind of walk it and like talk to you about that.
Yeah, and just one other thing, because we were started this business in 2005, we went through a downturn in the economy before. It's kind of interesting, and I was talking to Nick about this. I guess it was yesterday, but our business, when we went through that downturn, we were kind of still learning things and how to get through it. But this last January, we had our big partner and BDR retreat where everyone from all of our 30 plus cities gathers, and we're laying out our plan, for the year 2020. And, for the last 10 years or so, the economy has been trending upwards and we've been in that growth phase. And so we had all of our plans kind of laid out for what 2020 would look like. And pretty much, end of February, beginning of March, you kind of just have to scrap all that and start over. And so that's going to be what we'll talk about a little bit at the second half of this the webinar. So to start, we'll talk about the loans and the different things that are available and what you need to do and what you can do. But after that, we'll go into kind of what the next steps are.
Yeah, thank you, Bill. And I just want to jump in here and say hi to everyone. I am Nick from Founders Live. You probably get my emails or messages at some point in time, so hopefully they are at somewhat valuable. Good to see everyone. And just in terms of a little bit of housekeeping and rules, we will be addressing questions, and definitely we want your questions. Bill, correct me if I'm wrong, but we will also have people, if they want to submit questions in the chat session of this call, we can address them as well. But we will identify a time to address Q&A as Bill will lead the conversation on this. So I'll let him set those specific rules. But please, if you have any questions, clearly you probably do. We're all wondering what the heck's going on here. Please write them either in the chat room or at the time when it's ready, we will address them. One last thing, please, if you can, mute your microphone. We have 23 people on this call right now, and if we have background noise from everyone, it's going to actually interrupt things. So make sure you are muted, and then when you want to ask a question, you can unmute and talk. So hopefully that covers everything. And Bill, I'm going to hand it off to you.
All right. Yeah. Thank you, Nick. And yeah, I think the best way to do this is we'll kind of do small chunks at a time. So I'll go through a few things. We'll open it up to questions, and we'll just keep kind of moving it along that. So yeah, feel free to type your questions in the chat, and we'll get to those when we can. If we don't get them, we'll save a log of them and try to get it at the end if we miss anything. But let me go ahead and share my screen so we can get started. Okay, so we're gonna hopefully everyone can see that. So we're gonna get started on the government relief programs that are available. Certainly, it's been in the news quite a bit, and we're gonna give you kind of an overview of what exactly is available in these and what it'll take to apply for them, and just kind of get started from there. So let's go ahead. And I guess I should state this up front because it's an interesting times. The actual facts that go along with these loans are really changing on a regular basis. We've been putting out materials as far as, okay, here's all the information you need to know about the loans, and then the next day they change it again. So this is, to the best of our knowledge, as far as right now, the information here is accurate, but the SBA and the government changes things all the time. One easy example is right here on this 0.5%. So that was actually, I think it was at 4.5% when they started. Then they dropped it to 0.5%. Now it's actually at 1%. So the percentage on the Paycheck Protection Program on the loan has been changing quite a bit. It's at 1% now. Now, I'll get into a little bit of what that means exactly in a second. But let's talk about the two different loans available. So the Paycheck Protection Program is, it's designed for businesses to be able to keep their employees employed so that they can keep paying them, and so the businesses don't have to have huge layoffs and go out of business. So basically, you can use this loan for these items right here. You can use it for payroll, you can use it for mortgage interest or rent, utilities, or for interest on debt incurred. Now, the amount of the loan that you can get through this Paycheck Protection Program is 2.5 times your business's average monthly payroll. So right away, we're kind of getting into the idea of your record keeping and what records you'll have to have. There are a lot of different calculators out there. There's different applications. one thing that to note about the Paycheck Protection Program is that this is being done through individual banks, through different SBA lenders. And they are all going to have a little bit different requirements on what you'll need. We'll talk about some of the things that are going to be pretty universal of what you'll need. But basically, you have to be able to document what your average monthly payroll was for the last 12 months. Now, when we start talking about startup companies, and maybe you don't have 12 months of history, so they do allow for those situations. Now, to qualify for either of these loans, you have to have been in business before February 15th of this year. So let's say that you just started business in December of last year or November. You can take your average monthly payroll from January 1st of this year through February 29th, and that'll be the basis. So you don't have to have a full year to calculate this. Now, it's still going to be 2.5 times. So if you're a business that pays $50,000 a month in payroll, and that's salaries and wages, that's benefits and all the things that go into payroll, $50,000 a month. So you would be able to qualify for a loan of $125,000. And like we said, it's 1% is what the interest rate is on that loan. It's a 2-year term, so the payments don't start for 6 to 12 months after you receive it. It's that part I'm sure is it's going to be changing as we figure out how long this is going to last, how long the impact is going to be. So if the economy ramps up 6 months from now, they might require you to start making payments back on that loan in 6 months. If it lasts longer, it might be longer. So that's just a general idea. Now, here's the big thing with the Paycheck Protection Program compared to the disaster loan. You can get up to 100% of this loan forgiven. So like in that example I used where you're paying $50,000 a month, you get $125,000. There is a path forward where you don't have to pay any of that back. So we'll get into that in the second half, the idea of how can you maximize your loan forgiveness on this Paycheck Protection Program. So before I get into some of the specifics on, what if you don't have any employees, or what if you are only using contractors, let's talk about what they call the EIDL, the Economic Injury Disaster Loan, and how that differs from the Paycheck Protection Program. So it's as far as the uses go, payroll is still going to be the big thing, but you can use it for other vendor expenses, different things that come up throughout the business. You've got a little bit more leniency as far as what the uses can be with this loan. Now, as far as how much of a loan you can get, this isn't just a straight calculation based on payroll or some other number. This is going to be more, you have to qualify for a certain amount. So if you are a startup business, you've been in business a couple months, haven't actually started making money yet, it might be harder to justify that your business has been harmed by what's going on, because you weren't making money in the first place. So how could you be making less money now? So that's something that you'll kind of have to consider on an individual basis. You're going to have to be able to justify and document how you were harmed by what's going on to qualify for a loan. Now, it's still, if you do get a loan, it's a pretty good loan to have. It's only 3.75%, 30-year term, but you're not going to get the loan forgiven. So you will have to pay it back. You just have really good terms for that loan. So that's kind of the overview of what the loan is, what these different loans are about. So one question that kind of comes up, right away is, can you apply for both of these loans? Can you get the disaster loan, and can you get the Paycheck Protection Program loan? Now, assuming that you qualify for each of these loans, yes, you can apply for both. So you could get both of these loans. You cannot use them for the same purposes as both. You can't use both loans for the same purpose. So, in this example, if you get a disaster loan first and you use it to pay your workers in April, you can't also use the Paycheck Protection Program for payroll in that same month. So this is where, when you start thinking about some of the things that are going in here, this is why it's super important to really have things documented, be able to track your expenses, track how you're using this money, because that's how you're going to be able to either get loans forgiven or you basically get the most out of your money and have the least amount of headaches. So I want to point out a pretty cool resource that's available to you. So let me share you something else, and this will answer a lot of questions about these two loans and who's eligible for it and what you might get out of it. So let me just switch real quick to a new screen. Okay, so on our website at nowcfo.com/cares, you can see we've got a couple FAQs available, and it's got a lot of information in here. That's one of the things that I kind of mentioned earlier, is these things are changing on a day-to-day basis. So, if I were to share a PowerPoint presentation with you, that's good for that day, but it might not be good the next week because they might change things. You can always go here. This information is going to be updated on a regular basis. So let's talk a little bit about who is eligible for these loans. So if I scroll down, actually, I do want to talk about this real quick. A lot of you have heard about the loan grant through the Economic Injury Disaster Loan. And the way it came out in the news right away was every business gets $10,000 immediately if you apply for this loan. And there was actually a box that you could check on the application. So the SBA Disaster Loan, the way you apply for this loan is directly through the SBA website. So you go into this website, you fill out the application, and there's a box that you can check. It says, do you want the $10,000, what they call it, they actually call it a loan advance. So what it was $10,000, and then if you got like a $50,000 loan, that $10,000 basically goes to the whole $50,000, but you get it, theoretically, you get it immediately. So that information was out there at least a week. I think it might have even been longer than that. And what we have learned since then is it's not an automatic $10,000 grant or advance. It's a $1,000 grant or advance per employee up to $10,000. So now when you start talking about some of the smaller businesses, if you're a business that employs 3 people and you apply for this loan, you're not getting $10,000, you're getting $3,000 based on the employee. So it's still, you could still get that grant, but the amount you get is actually going to be a little bit different. Okay, what are the requirements to be eligible for disaster loan forgiveness? So basically, this is going to tell you a lot of the different documentation you're going to need. It really goes back to what I was saying before. You have to be able to prove how you were harmed by this disaster. I'm sorry, disaster loan forgiveness. I looked at the wrong one. So to be eligible for the disaster loan, you have to prove that you were harmed by the disaster, and how much your harm came from. Now, the SBA is going to be looking at different things with your financial statements, all the information that they're going to be asking for to determine how much of a loan you actually qualify for and how much they're going to be willing to give you. So that's one thing where you really need to be prepared with financial information. You're going to have conversations with SBA lenders, and you know the length of the time or the length of the process. I know some people at the beginning, if they got in early, it kind of took 4 weeks from start to finish to go through the process and to actually get the money. I would anticipate that it's probably going to start to take a little bit longer these days because there are so many people applying for it now. So just be prepared that if you're looking for money immediately, you have to be able to get 5-6 weeks through this before you probably get any of this loan money. Okay, let's go real quick to the Paycheck Protection Program. So again, this one's a little bit different. We talk about obviously still small businesses. One thing that has come up, there's basically 2 different loan periods that we're looking at. So for small businesses, that application was available to them on April 3rd, and you could start applying. For sole proprietors or people who are independent contractors, self-employed individuals, that application was available on April 10th. So if you're someone who you've got your own business, you're the sole proprietor, and you're basically you pay yourself through self-employment earnings, that's kind of what you use for that calculation of your monthly payroll cost. So it's still the same idea, but it's just a little bit different. You're not taking payroll tax returns to verify the amount of how much you can get. There's it's different documentation to verify how much money you're earning through your business that you own, by yourself. Similarly, if you're an independent contractor, you can also qualify for this loan. So this one, it's because this went into effect April 10th for these people. Almost anyone who's got quote unquote payroll costs can apply for this loan. Now, the independent contractor part is interesting because let's say you are a business and you've got 1 employee, but you've got 10 independent contractors that you use because you're a small business, you don't have enough to justify having 10 full-time employees. These independent contractors do not get included in that that monthly payroll cost. So if we go here, what constitutes a payroll cost? Compensation, payments for vacation, family, medical leave, retirement benefits, group healthcare benefits. So again, it's not just wages, it's the whole payroll cost. And like I said, there are various calculators and worksheets available. We can certainly help you out with that calculation, but you kind of go through and you include all these things, calculate a monthly cost, and then take 2.5 times, and that's what the loan is for. So the forgiveness on the loan, I'd like to save for a little bit later. Let me see if there were any questions. Sorry, I wasn't paying attention. Okay, so yeah, one of the questions was, does a contractor count as an employee? So yeah, it's kind of a bummer for for these small businesses who really try and use contractors a lot. That's something we certainly see a lot of. When you're getting a business started, you're not just automatically hiring full-time employees and taking on that cost. So yeah, unfortunately, the information we have now is no, they're not counted. Okay, a question about non-US owners. There is that restriction as well. Is there another loan we can? can apply for, where we can qualify. I mean, you could go through the disaster loan. Also, as you know, that's another avenue that's available to you. Did anybody else have any other questions specific to how you can apply, or sorry, what about independent contractors as individuals? So yeah, if I can go back real quick. So that was part of the kind of the updated application on April 10th. Individual or independent contractors can apply for this loan as well. So contractors can't be included in a business, but they can apply on their own for relief.
Bill, could you maybe just take one level deeper on explanation on that?
Sure. Which part of that? If you're an independent contractor?
Yeah. So, I mean, I think just a clarification on, you know, there are a lot of early stage startups that, especially as the founder, you pay yourself as maybe a 1099 contractor, you know, and that might be different than this question, which is I'm an independent consultant that gets checks under my name and business names. You know, that's basically, I'm assuming that's more of a sole proprietor that is identifying their own business as them being a contractor that works with outside companies. Maybe just piece that out a little more, just so people understand that if they are running a small shop, that they pay themselves, maybe the founders are paying themselves as 1099 contractors. Does this apply?
Okay, yeah. Let me, sorry, let me go here real quick. So it's a little bit, it still is a little bit of a gray area, because, you know, one of the things they talk about is independent contractors that would otherwise be an employee of your business. Now, there's going to be a lot of things that the SBA is going to have to provide a little bit more clarification, because obviously when you look at the IRS, they're always comparing employees to contractors, and they want to make contractors be called employees if they, you know, meet these certain guidelines. And the reason being is because they want to collect their payroll taxes and all these different things. So, you know, that might be one that would require follow-up to your individual situation. It's the employee versus contractor guidelines and rules has always been a gray area in a lot of aspects. So it is very much kind of a case-by-case situation. So there are instances where if you've got a independent contractor that's working, I don't know, 25 hours a week for you consistently, you know, maybe there you can count them as part of your payroll cost. But if they're someone who kind of comes and goes when you need them, then probably they don't count. So you know, I don't think there is a bright line test on how we can do that. It's going to have to be kind of case by case.
Got it. So I'm going to go through these questions real quick, and I'm actually going to call out Cheryl if she wants to give a little more description and explanation on her question. That might be the best way to do this. So Cheryl, if you want to unmute yourself and maybe ask your question.
Yeah, I just, you know, we're as a banker, we're getting lots and lots of inquiries, and you know, for most of the people who are on the phone, you're probably really in dire need and need to get the applications done. But I've also been inundated with calls from some companies that might otherwise be relatively well capitalized. They might have larger lines of credit to draw on. They might actually have cash reserves, you know, of a year or more for their operations. But they feel that they're entitled as well to apply to the PPP program. Do you know if the government is taking a look at any of this? And because it wouldn't seem to me to be the intent. I don't want to discourage anybody or encourage anybody, but have you received any inquiries from some companies that are actually doing well and expecting to receive proceeds?
Yeah, even if you are, like you said, doing well, like you were prepared for what's happening, you can still qualify for these loans as long as you can show there has been that harm done to your business. And the kind of the reasoning behind that is, let's say you're a business that's doing well, but you can start to see a downturn in your revenue. It's trending downwards a little bit. You can't quite have the volume that you were doing. Now you could probably make it through, but maybe you have to make a cut here and there. Maybe you'll let someone go because your volume's not as high. The idea is, let's make sure you're whole so that you don't have to cut people, so you don't have more and more people on unemployment, and you can weather that storm. So now there might be some prioritization of when people get loans. The thing about the Paycheck Protection Program, which obviously is those are being run by individual banks and lenders, SBA approved lenders, whereas the disaster loan is going straight through the SBA. So how different banks and different lenders will handle that, it's kind of up to them. But yeah, I think anybody who has been harmed by this can apply for it and get this money.
Hey, Bill, I got a question. What sort of caution would you provide here? Just because clearly any sort of application, if not that it gets granted and you get the money, there are some things to be aware of. So what areas of caution should founders and business owners consider if they want to go through with this?
Well, I mean, the big thing is they are trying to streamline and expedite this process, right? They want to get everybody into the program and get money dispersed right away. So a lot of the application process it's pretty quick, as far as you put in the numbers and you submit the application, and then someone's going to come talk to you. Now, you actually have to be able to justify all those numbers that you've got in there. So even though that initial application itself doesn't necessarily require you to submit your payroll tax returns or income tax returns and all these documentations up front, you are going to be asked for that information after the fact. So your financial documentation needs to be in order. You have to be able to back up all the numbers you put in there. You can't just go in like, oh, I think my payroll, it's about $10,000. I'll put in $10,000 here. I'll get $25,000 as a loan. That's just going to cause more delays if you have to constantly go back and forth. So take the time up front, get all the information in order for the application. Anything that you're putting in there, make sure you've got documentation to back that up. So then when a lender reaches out to you and says, okay, this is the information I need, you can get that back to them right away. Hopefully that'll speed up the process, and you're not going to have to do a lot of back and forth in that regard. One thing I would also point out in both of these loans, on the application, there is a lot of questions that they ask of the owners and whoever is signing, and you're making certain representations of the information in there. And some of these can carry pretty big penalties if you're lying about it. So, with everything, be truthful about your situation. If you're trying to game the system to get extra money that you're not entitled to, that's obviously going to have bad consequences for you.
Got it. We have another question from Cheryl. Is stock compensation included in the payroll and benefits cost for the calculation?
That's a good question. I don't believe it is. I guess it's not listed here. You can see there actually is a. Yeah, sorry. The best answer I have is I don't believe it is. I can't say that with 100% certainty.
Got it. Any other questions at this moment in time before we move on?
Nick, this is Rick Plank with Eastwing.
Yeah, what's going on?
How are you doing?
Pretty good.
Good. Hey, I got a question that's actually not about my business. It concerns my wife's situation. She's an independent contractor, has worked for several years for a company that's based in Florida. We do all of our personal banking through BECU, both business and our personal checking and savings. She filled out the form and took it to BECU, who refused to accept the paperwork because BECU is not a national bank, and the company she works for is in Florida. And she's gone to a couple of other banks that are national banks, and as of a couple of days ago, they wouldn't accept her application because she didn't have an account established. So we're between a rock and a hard place and don't know where to go.
So yeah, and I understand that that pain. There's a lot of people who are in similar situations where either their bank isn't taking applications, or for whatever reason they don't qualify, so they have to look elsewhere. There are a few good resources available that will tell you all the different banks and credit unions, different SBA lenders, and what their requirements are. Are they open to everybody? Do you have to be in a certain region? Do you have to be a customer already? I can certainly share that information. There are other paths that you can get to, even if that particular bank isn't accepting it. I know I've been working with one company in particular. Their credit union told them to apply through this company, Cabbage, Cabbage with a K. So Cabbage.com, they're a lender. So we went there, we checked it out. Basically, what Cabbage is doing is they're serving as a portal for these Paycheck Protection Program loans, and then they're kicking it out to whichever lender they can connect that person to. So Cabbage has a bunch of different lenders. You go through them, and then it'll contact you with a lender. Now, I will caution you, like when I'm, saying you can do this or you can do that, you do have to make sure that it is right for you. I haven't actually gone all the way through the process with Cabbage yet. Me and my client, we're working on it together. They're in the process. So, we'll see how well that one worked. But that's just to say that there are other avenues available. I'd be happy to share some of those sites with you.
Okay.
Oh, actually, I think it looks like Morgan shared that link.
Yeah, I just, while looking at her note, I'm getting seems like about 5 a day. PayPal is doing that. I think there's a company called Lendio. But you spend quite a bit of time filling out all the paperwork, and you don't know whether it's just a black hole that you're dumping the application into.
Yeah, and I would say that one of the almost universal things we've been hearing is there isn't anything that's universal about this process. Everyone has a little bit different experience.
Right.
Some really good, some bad. Unfortunately, I don't have the magic answer on that one.
Okay. Thanks,
Bill.
Bill.
Yeah, thanks. I think it might be good just to touch on the other stuff going forward. What do you think?
Oh, yeah. So, actually, let me just go ahead and share my screen again on this one. So we've got, I want to talk about, what comes next. The idea is, okay, let's say you have submitted your application, and now you're in the waiting game. So we touched on this a little bit. No, okay. So we touched on this a little bit. You have to have all your records in place because they're going to be requiring documentation as far as what you put in your application, what you qualify, et cetera, right? So you want to be ready for that. But let's say, okay, now you've got your money, it doesn't really end there. You're going to have to start thinking of, you're really going to have to track how you're using that money. And that kind of goes into this idea of maximizing loan forgiveness. Because there's certain guidelines in place where if you use this PPP loan, for payroll, then the loan gets forgiven. Now, unfortunately, there's still clarification needed on exactly what that calculation is. And actually, I'll bring up that calculation as best we know it right now. Where'd it go? Okay, sorry. No, sorry, that's not it. I seem to have lost it. So basically, the calculation is the loan amount you received less ineligible expenses. So we talked a little bit about what the uses were for that loan. It was payroll, rent, utilities, and then it was up to 25% that isn't payroll. So if you get a $100,000 loan, you can use up to $25,000 for non-payroll expenses. But let's say that you've got this loan amount received, all of it was used for eligible expenses. So you've got, in this example, we said $100,000. And now there's this additional calculation. They're going to reduce the amount that will be forgiven if you have less employees during the covered 8-week period than if you did before this started. So, like again, when we talked about the idea of the reason for this relief is because they want to keep everybody employed, right? They want you to keep your employees on the payroll so that people will essentially be taken care of. So when they talk about a covered 8-week period, that starts when you receive funding. So you receive your loan on May 1st. It's the next 8 weeks that's the covered 8-week period. So if during that 8-week period you've got 10 employees, but one of these periods here, let's say January 20th to February 29th, or January 1st, 2020 to February 29th, 2020, you had 20 employees. So you reduced your head count by 10 over this time, or by 50%. The amount that's getting forgiven is also reduced by 50%. So that's something that you'll also want to keep in mind if you've got employees. That's how you get the most forgiven, is if you keep those employees on your payroll, because that's kind of the whole point. Paycheck protection. We're trying to protect employees' paychecks. So when you think about what comes next, the very next thing is you have to keep really good records of how you're spending this money. And if you're getting both loans, if you're getting the PPP loan and you're getting the disaster loan, you can't lump that money into one big bucket and use it for various things and then separate it out. Keep detailed records. I got this money here. This is what I'm using it for. I do know one company that we've worked with. They actually had a separate account that they put this money into, and so every time they needed to use it, they pulled the money from that account and used it directly for that payroll run. And so now they've got this paper trail. They can show exactly how they use this money. And if you've got these muddy waters and it looks like you were using this money to buy equipment or pay a bunch of old outstanding bills that you had, you can still, it's not to say that you can't use the money for these other uses. You might have a really important expense that has to get paid and you have to use that money for it immediately. It's still a loan. You can use it for that. It's just not going to get forgiven. So you're going to have to pay it back. And like I said, you've got great terms. It's 1%. The PPP is 2 years. It's not a bad loan to have, but theoretically, if you could have used it for the covered uses, the eligible expenses, you wouldn't have to pay any of it back or a big chunk of it back. So that's going to be the most immediate thing that you need to start thinking about after you've got your loan application in. One, get the documentation ready that you'll need to complete the application. And then two, make sure you've got a system in place that shows exactly how to track these expenses. Because we're talking about, it could be significant dollars that you're having to pay back that you might not otherwise have had to. So that's really going to be the biggest thing. Now, if you want to look big picture, what do you do after this? There's going to be a lot of things that you'll start to reconsider from a big picture business point of view. I mentioned this at the beginning of the call. I had a budget and a projection for 2020, and all of that basically is just going to get scrapped because we're in a different world right now. Things are different. You have to start thinking about how does this affect your business? How is it going to change? And come up with a new plan. So I want to leave some time for questions. So let me just real quick put in a quick plug for upcoming webinars that we've got through Now CFO. We're going to do an 8-week roadmap to recovery webinar series. So first one's Thursday for us. We're going to give you the overview, but these are the next 7 weeks what we're going to be talking about. So next week we'll do a deep dive into maximizing the loan forgiveness. From there we'll start going into how do you establish a new break-even point, refining cash flow forecasting. You can see all the different topics. These are all going to be things that you're going to have to start thinking about all over again. Like if you've done these things before, you have to do them again. If you haven't done them before, now is more important than ever to start thinking about these things. So we'll definitely, like I said, next week, maximizing loan forgiveness. It's going to be a huge one. But yeah, just be on the lookout for more information on that coming out. Talk to either Morgan or myself if you want more information on that. But yeah, I'd love to open up to questions on this now.
Yeah, thanks, Bill. Please share that with myself as well, and we'll push that out through Founders Live. That'll be a pretty valuable, course. I wanted to, let's just have Katie. Katie, if you want to maybe just jump on at least voice and give a little more detail on your question, we'll address that.
Hi, Bill. Hi, Nick. Thank you. I just I'm starting to kind of get a grasp of how to optimize the PPP loans and forgivenesses. And my question really relates to, my understanding is the goal is to keep the head count on. So if everyone takes, say, a 10% pay cut, you keep all the heads on board, say it's a 100-person company. Knowing that 75% of the loan has to go towards payroll to optimize that forgiveness, where your payroll goes down, your head count stays the same. Is that a legal way to kind of enable everyone still in income, but also really optimize that forgiveness dollar amount?
Okay, so the question is, you're keeping your head count the same, but reducing your payroll costs essentially kind of across the board.
Yep.
Okay. So basically that's going to be part of the calculation. So, if you reduce, and again, just to be clear, there's going to be more guidelines coming out on the exact formulas. But the idea is if you do reduce payroll by 10% across the board, the amount that would be forgiven would also be reduced by 10%. Theoretically, the exact calculation is still to come, but yes, that would still reduce your loan forgiveness. Now, it's not the so I guess when your question is that a legal way to go about optimizing it, so it's not going to optimize loan forgiveness if you are reducing payroll, because that's going to affect it just the same as keeping 9 out of 10 people the same and cutting one person versus everybody taking off 10%. It's basically you're getting to the same spot.
Okay. Thanks.
Yeah, and like I said, there hasn't been a ton of guidance yet on the specific calculations. It's been a lot of general information about here's things that headcount, total salary costs. Can you, one of the other things is, let's say you did let people go because all of this happened and you're like, I've got to act quickly to save my business. I have to cut some people. If you bring people back, you can still, get that loan forgiven if you've got your headcount back up to where it was before. So just because you might have let some people go at the start of this doesn't mean you're not going to be able to get this loan forgiven if you bring them back. And again, you've got this extra money through the loan program, so you should be able to bring them back and keep them employed, and then you get that loan forgiven. So there are ways to kind of restore.
Yes, so restore that. And my understanding is the loan forgiveness period is May 5th to June 30th. So having, to be clear, having those employees on your books in that time is crucial. And then after the 30th, you can make decisions based on what you need, but that's outside of that forgiveness time period of the loan.
Yeah, correct. So basically you have until June 30th to restore your payroll, your headcount. I think that's what you're asking, correct?
You have
Yeah. Yes.
I'm sorry, my understanding was within the 8-week period of receiving money of the loan, you have 8 weeks to keep that headcount on your books in order to qualify for the opportunity for forgiveness.
Okay, so
does that make sense? Am I
the way that it reads right now, it's if the total FTE reduction between February 15th, 2020 and April 26th, 2020 is restored no later than June 30th, then the reduction in loan forgiveness does not apply. Now that's and it's saying if the total salaries and wages is restored no later than June 30th, then you don't have that reduction to forgiveness. So it, again, it's, I guess we'll see the exact formulas, but the way it reads now is you have until June 30th to make that restoration, either total payroll or headcount.
Got it.
Nice.
Thank you.
Bill, maybe one of the last questions, because we're getting up to the time here. I've seen some things about how a certain amount of loans have already, in terms of billions of dollars, has already been given out. They identified about 350 billion. Do you have any insight on the timeline of all this? It's first come, first serve. And then is there more to come? It's a lot of money, but is there more to come? Or is this just like, when it's gone, it's gone?
So, well, I guess two things. One is they are trying to add the total amount that was given. I think there's a new bill in place to get additional funds. I would say from people I have talked to, whether it's SBA people or other people involved in the process, is the expectation is if there is still a significant need for more money to go into the economy to keep businesses afloat, it's going to happen. Now, there's certainly no official word on that. It's not something you want to rely on. But I think we definitely saw it. There was a bit of almost a panic for people to get their applications in immediately because they thought that the money was going to run out. I think that should be less of a concern at this point. Now, the longer you wait to get that application in, you are further down the line, so it might take longer to get your money. One of the examples I mentioned earlier at the very beginning was somebody who got their application in even before, this was for the disaster loan. They submitted a disaster loan application even before there was a official COVID-19 disaster loan application. So for him, it still took 4 weeks from when the application was submitted to when he received his funding. And he was in before almost everybody else. So if you think about now, if 4 weeks is basically the quickest people were getting it, how much longer is it going to take now that there's millions of businesses asking for that money? You know, they can only process so many loans, you know, every day, every week. So time frame, I don't know, is 6 weeks still not enough time? It's hard to say.
Yeah.
Haven't seen a ton of businesses actually receiving their money yet. So, you know, it's one of those things we'll have to kind of see as time goes by.
Got it. Last question. Do you know anything about Main Street lending programs?
No, I don't. Maybe Cheryl can share some information about that.
That was actually my question. We're still trying to get information. We know that they're out there and they are opportunities for people to get additional dollars right now. We're still trying to get the rules of applications from the SBA, but it's another one that's going to be out there and we can all be on the lookout for it. I don't know that it's as advantageous as the PPP or the EIDL, but it is another resource.
Yeah. I appreciate it. Thank you.
Got it. Well, yeah, I mean, we're running up to time here. I know everyone probably has more things, more Zoom calls,
Yeah.
you know, so, but Bill, I want to thank you so much. Morgan, thank you so much. And everyone from Now CFO, tell us a little bit more. If anyone has other further questions, where should they go? How should they contact you?
Yeah, I mean, certainly email is easy way to get a hold of me. You can always look up nowcfo.com. You know, if you're local here in Seattle, you can look me up and kind of get in touch with us that way. I know Morgan's got her contact information in the chat as well. So feel free to reach out to her as well. Actually, I'll just type my email in there real quick. But it's, it's bsablan@nowcfo.com. And honestly, everyone should feel free to reach out to me at any time if you've got questions. I'm here to help you. So I'd love to be a resource if it's something I can help you with. I'd love to do that.
Great. Thank you so much. Thank you everyone for jumping in here, and hopefully this answered some questions. I'm sure that there's more questions generated. It's a confusing time for sure. And I'll just add real quick, obviously this is an option, but it's the time and season to relook at your business and make changes as well. Everyone's doing that, and I keep using the term rebuilding the airplane in midair, and that's what we have to do. So good luck everyone. And yeah, if you have any questions for me as well, feel free to message me or shoot an email my way. But we do these quite often now online on Founders Live, and excited to see more of the course in the the stuff that you guys are coming down the line with as well, Bill. So thank you so much.
Thank you, Nick. Appreciate it.
All right. Enjoy everyone. See you soon. Bye.
Bye.